stories.
Your freedom.
The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com, coming to you live from Los Angeles, California. I am out here for the entire week, and I'll be doing the show remotely, I believe, every day but Thursday. I think we're going to have a guest host on Thursday, but I'll be doing the show from Los Angeles and probably Newport Beach. You know, I've got two events going on today, one tonight down in Orange County, and then two events tomorrow in UCLA. If you're listening in Southern California, I'm pretty sure that we're pretty much sold out, but I think we have some balcony seating remaining. I think we had 500 seat capacity in both locations, but I'm told that they have extra seating. So you are still able to make a reservation if you have not yet done so to either the Monday night tonight or tomorrow, Tuesday night's event. And remember, tomorrow at UCLA, we also have the big debate between Austrian and Keynesian economics as far as what should be done now given the state of the U.S. economy and maybe why the U.S. economy is in so much trouble. That particular event is only opened to the UCLA student body. Should be a very interesting discussion, and then we'll have the Euro-Pacific Capital event immediately following. Remember, in order to go, you've got to go to the EuroPac website and register. And again, the main reason I did this is the last time I had the Southern California event several years ago, we sold out quickly on the registration, but not everybody who registered showed up, and we had hundreds and hundreds of people that we had to turn away from registration because we told them it was sold out, and ultimately to find that many of the people who registered did not, in fact, attend. It was still a very well-intended event, but I know there were people who wanted to come that were told they could not. So that's why we had the fee this time. It's pretty small. It's $20, but you get, when you get there, a new copy of How an Economy Grows and Why It Crashes, which sells for $20. So it is a good deal. Anyway, the guest host is going to be Tom Woods, so he is going to be sticking in for me on Thursday. Meantime, today's guest is not coming on until 11 o'clock. If you want to call, the number to call is 855-4SCHIFF, 855-4SCHIFF. I believe the phone lines are open, so it's a good time to call because we will be able to take quite a few phone calls because the guest is not coming on until the top of the second hour of today's show. Meanwhile, stock market is off to a rather lackluster start. The Dow is up about 30 points, the Nasdaq down about 5. Not much reaction in the stock market to events over the weekend unfolding in Europe. I think the big news coming out of Greece is despite the fact that Papandreou survived that no confidence vote, he's stepping down. He is announcing the formation of some type of interim government prior to the next round of Greek elections. I think in February maybe they're calling for new elections, but meantime he will be stepping down before then. It doesn't seem to have derailed the bailout plan. The Greeks still seem to be going ahead with that plan. The real action today is in the precious metals market. Gold, I'm looking at the ETFs, GLD up the equivalent of $25, silver up 67 cents per ounce. Both the gold and silver charts looking very, very good, as is the crude oil chart. Oil prices now up $1.20 at 95.5 per barrel. This is the highest oil has been since August 1st. So you've got the Federal Reserve confidently predicting that the 3.9% annualized CPI number, which is the highest in years, the Fed is saying, don't worry, it's going to come down because commodity prices are falling when commodity prices are, in fact, surging. They've been surging for the last month, and to me, it looks like there is no end in sight to this upward move. Meanwhile, the U.S. dollar continues to fall. It's not getting clobbered, but it's going down to, against most of the currencies. The Japanese yen is up, the pound is up, even the euro is up. We're up above 137.50. So the dollar is slowly losing steam, despite the fact that you've got a lot of people in the investment community who are pounding the table for the dollar. They're claiming that the dollar is going to rise because the euro is in so much trouble, that we're the tallest midget in the room. Hopefully I don't get another letter from the Little People's Association. I think last time I used that word, I got a nasty letter from somebody. But in any event, I don't believe that's the case at all. And in fact, I think if the euro was going to fall, it would have already fallen. It hasn't done that. In fact, if you look at the dollar index for a barometer of the dollar versus other fiat currencies, the dollar index peaked under 80. Right now it's at 76 and change. 80, it didn't even get as high. The dollar index, even with this most recent crisis, which seemed to be the deepest of the scares that we've had coming out of Europe, even with all of that, the dollar could not even get back to its high of January of this year or even December of 2010. We didn't even get near that high, which was close to 82, and we still didn't get near the highs that the dollar index had in August of 2010 and nowhere near the highs of June of 2010 when the dollar index hit 89. So given that they were throwing everything they could but the kitchen sink at the euro, the fact that the euro was not able, the dollar was not able to rise against the euro, given all that, I think it tells me that the chances of a dollar rally against the euro are slim. The euro, however, is falling against gold. It's not falling against the dollar because that's how weak the dollar is. But if you look at the price of gold is the highest it's been since September 21st of this year, and we're breaking through some resistance. So I think we have some clear sailing up near the highs of around about 1900. That's about as high as we got. We're about 1750 now. I think obviously the rate cut, we talked about that already. The surprise rate cut out of the ECB is very, very bullish for gold. And again, why didn't the dollar rally on that rate cut? You had a rate cut that few people anticipated. The ECB cut rates from 1.5 to 1.25. Yet despite that, you did not get a rally in the dollar. And if the dollar wasn't going to rally on a rate cut from the ECB, you got to ask yourself under what circumstances would the dollar rally? Because that was about the best thing that could have happened to the dollar, and the dollar went nowhere. So if the dollar wasn't able to rally under those ideal circumstances of utter chaos and pandemonium in Europe, a potential Greek default, leaving the euro, that when Papandreou announced that referendum, that didn't really give any lift to the dollar against the euro, and then you got that surprise rate cut. So I would say it's I don't know where people are getting the idea that the dollar is going to rally now if it couldn't rally. Maybe it's more of wistful thinking than anything else. Anyway, we're coming to the end of the first segment. I've got several people on hold. If you want to call, it's 855-4-SCHIFF. We will be back in a few minutes, so stick around. We got a lot more of the Peter Schiff Show coming up here on SchiffRadio.com. This is Peter Schiff. You are listening to the Peter Schiff Show on SchiffRadio.com. 855-4-SCHIFF is the number to call. And before I go to the phones, I want to read a little quote from a gentleman who manages $400 billion through the China Sovereign Wealth Fund. This is a big chunk of money. It belongs to the Chinese people, accumulated by China because of all the foreign exchange intervention. China has about $3 trillion in total foreign reserves. This individual manages $400 billion through their sovereign wealth fund. And asked about Europe and whether or not he was interested in investing there, his response was he did not consider it to be a profitable investment opportunity. And I'm going to quote from Jin Liquin, that's how you pronounce his name. Anyway, here's what he said. If you look at the troubles which happened in European countries, this is purely because of the accumulated troubles of the worn-out welfare society. I think the labor laws are outdated. The labor laws induce sloth, indolence, rather than hard working. The incentive system is totally out of whack. Of course, he could have said the same thing about the welfare system, the welfare state here in the United States. Certainly some European nations have a more advanced stages of the disease than America, but we are inflicted with the same disease. And this is, again, coming from communist China, making fun of Europe for having too much socialism. In fact, I think that in Europe and the United States, there is clearly more socialism today than exists in communist China. So those of you who think that China is communist, think again. Maybe they're communist in name only, but when they are criticizing other countries because of their welfare states, because the government is doling out too much to the citizens, that doesn't sound like the criticisms of a communist. That sounds like what we might have said years ago to the old-style Chinese or to the Soviets with respect to their social welfare states brought about through communism. Anyway, let me go to the telephones. First on hold is Ed calling from Colorado. Ed, welcome to the show.
Hey, Peter, how you doing?
I am well. How are you?
Good. I'm a client. I'm just moved to Colorado, but I'm from Florida. A longtime listener. Got a question for you. Since everybody keeps bringing up the Bible. I'm not a religious person, but in a lot of the talk shows, it's like Ron Paul and the Christian right and all that. What about the Jubilee they had in the Bible? That was a debt forgiveness. Since we're doing this anyway with student loans and everything, what about the IMF? I know they're not going to do it, but I just wanted your opinion on the Jubilee and if you know anything about it and if that could apply today. So I'll hang up and listen to your call.
Well, I'm not that familiar with the Bible reference, but I do believe that ultimately debt needs to, be liquidated. I don't like the idea of the concept of the debt forgiveness to the extent that government is now doing it. I would like debt to be discharged through bankruptcies, through the private sector, not by the government just saying the debt is forgiven. And of course, when the government forgives debt, the creditors still get paid. The debt is simply transferred to the government. What I want to see, to the extent that students don't have to repay their loans, I want the lenders not to get the money. But of course, the government has guaranteed these loans, so even if the debt is forgiven, there is no immediate loser. The loser is the taxpayer, but there is no loser in the borrowing transaction. You just have winners. The students don't have to pay back their money, and the lenders get paid in full, and the moral hazard gets worse and worse, and now we get skyrocketing tuitions as if they hadn't been rising fast enough. Same thing is going to be applying to the mortgage market when you have some type of principal forgiveness that is a government-led program. Again, the lenders get repaid, the borrowers don't have to pay it back, and the taxpayer gets stuck with the bill. Of course, the politicians don't actually give the taxpayers a bill. They simply run up the national debt, which is now about $15 trillion. But that represents a tab that has to be paid by the American taxpayer. And, of course, I don't think it's going to be paid by the American taxpayer through taxation. We just simply can't do that. It's going to be paid through inflation. We're going to print a bunch of money, and that is going to harm every American citizen who has U.S. currency. Anybody who has money in the bank, money under their mattress, anybody who has bonds, any dollar asset, annuities, cash value in an insurance policy, all this stuff is going to get wiped out. And, of course, prices will go through the roof for everything that we need to buy. So our standard of living will be dramatically reduced, even for the people whose debts are forgiven. Now, of course, they can always leave the country, but that is not an outcome that we should be thankful for. But anyway, so let me move forward. Next caller is Kevin calling from New York. Kevin, welcome to the show.
Yeah, hey, Peter, thanks for taking my call. First time I've called since your Occupy Wall Street video came out, and I just wanted to thank you. I feel like you did more public service during your time there than a lot of our politicians have done during their entire political careers. So thank you for that.
Sure. I think we got about a 2-hour version. Maybe it'll come out this week. I looked at it last week. The reason people had a much longer version. So we got a lot of raw footage, and a lot of it is pretty good. So, there'll be a lot more to see for people who are interested in more than just, I think, the 18 minutes or so that is available now.
Yeah, absolutely. Looking forward to that. A question for you. I know you've mentioned many times that if China stops loaning us money, that we're going to have to, I guess, rely on the Federal Reserve to print all that money, to replace the China borrowing. So I guess my question is, do we borrow the entire deficit that we have, like the $1.6 trillion in deficit? Do we borrow the entire thing from China?
No, we don't. We borrow. China is the largest creditor, but we borrow from Japan. We borrow from, a lot of the Asian economies, Taiwan, Korea, even like India is lending us a lot of money. Even smaller countries like Indonesia or Malaysia, Thailand, they're buying a lot of our debt. The Middle East buys a lot of our debt. Saudi Arabia. So there are a lot of foreign countries other than China. But if China were to back off, then a lot of other Asian nations would back off as well. Because what happens is if the Chinese decide to let their currency go up, then other Asian nations will be able to let their currencies go up. Because everybody is trying to keep their relationship intact. No one's trying to let their neighbor have what they believe to be a competitive advantage with a cheaper currency. So if China comes to its senses, a lot of other people are going to wake up as well. And then right now the Federal Reserve is still a significant buyer, but if a lot of these foreign central banks back away, then where is the demand going to come from? Is the private sector going to suddenly want to buy? Not at these low interest rates. So rates would have to move up substantially to attract legitimate investors who are concerned about a return. And the Federal Reserve can't let that happen without collapsing the economy. Now, that's what they need to do. This phony bubble economy that's dependent on cheap money has to be allowed to collapse. But they don't see it that way. They want to keep it alive at all costs. So the Fed is going to come, in my opinion, and just start printing as much money as they have to supply the missing demand. And as that becomes more obvious, the dollar gets even weaker and weaker. Fewer and fewer people want to own treasuries. You get more and more selling. And then the Fed, to maintain this fantasy, has to keep buying and buying and buying. And that's when you get the spiral. And then at some point, as I said, the CPI is going to be so high that the Fed is either going to be forced to slam on the brakes in a way that is going to just, we're going to just crash right into the side of a cliff, or it's going to be runaway inflation. But either way, it's going to be very, very bad economically for the U.S.
I gotcha. And if they did stop buying, and then let's say that our government actually came to its senses and said we're going to balance the budget, right? They're going to cut spending.
Yeah, we're going to have to hold off your question until the other side of this break. We're coming into a commercial. Don't go away. We'll be right back. You're listening to the Peter Schiff Show here at SchiffRadio.com. We're back. This is Peter Schiff here at Schiff Radio, and on the line, I think it's Kevin from New York. Kevin, want to continue with your question?
Yeah, hey, Peter. I was saying before, if China stopped lending to us and somehow our government actually came to its senses and, overcame, the angry public, and they cut spending and they balanced the budget, would that basically get us out of our trouble in a sense, because then we would avoid hyperinflation because we wouldn't need the Fed to print up all the money in the deficit? Is that basically the idea?
Well, if we did the right thing now, that would take the worst case off the table, for sure, right? We wouldn't have the worst case scenario, but we are still going to have to go through a period of time that's kind of like a penance for these past sins. We're going to have to allow, banks or businesses to fail without bailing them out because interest rates are going to rise. I'm getting I don't know if everybody's hearing all this feedback like me. It's very distracting. But either the banks are going to have to allow interest rates to rise, in which case, banks are going to fail. They're going to have to let real estate prices go down. They're going to have to allow government employees to lose their jobs. They're going to have to make a lot of cuts to entitlements. And so there are going to be a lot of people who are going to be disappointed by that. People are going to lose benefits. People are going to have to come out of retirement. So even if we do the right thing, it's not going to be a panacea. We're going to go through a few years where it's going to be very difficult. But there is a lot of light at the end of that tunnel, and ultimately the economy is going to thrive, and you're going to see a lot more opportunities, particularly for the people who are involved in these types of Occupy Wall Street protests. But it's not simply it's not an easy fix. It's not sweet-tasting medicine that needs to be swallowed. Remember, we've had years and years of reckless indulgence, of overspending, of overconsumption, and we have to go back to work. And that's going to be a rude awakening for a lot of people who aren't accustomed to real work.
Right. And if we actually balance the budget, would that include paying down the interest and the principal of our debts? Is that part of the balancing?
No, balancing the budget simply means we don't take on additional debt. It doesn't mean we pay off. We'd have to run surpluses to actually pay back some of the money we've already borrowed. And, of course, what's going to happen is as interest rates rise, which they have to do to have a real recovery, that means the interest payments on the current national debt will rise dramatically, which means we have to cut even more from our budget to get it into balance when the interest component is rising, which is why, I believe that ultimately the only way we are going to balance the budget and correct the imbalances in the economy is going to be with a default, with a organized restructuring a la Greece, where our creditors get a haircut, where the U.S. government doesn't pay 100 cents on the dollar. Because I think if we try to pay 100 cents on the dollar, the amount of budget cuts that we would have to make in order to do that here in the United States would be a political impossibility. And so I think that we would have to resort to inflation. So I think the only way we can avoid a runaway inflation is through a restructuring of our debt. And I hope we take that route. But again, that's one of the reasons that I don't recommend that anybody own U.S. government debt, even the shorter maturities, because I believe there is a real likelihood of default. And in the event that there is no default, well, then it's even worse, because then it's massive inflation. So I don't see how there's any way to win by being a holder of U.S. Treasuries or even any U.S. dollar-denominated debt. Because believe me, if interest rates rise and the U.S. Treasury ends up with a restructuring of its debt where there's a partial default, a lot of corporations are going to end up in default as well, because it's just, if interest rates go up, there's a lot of companies that are going to fail. And so I think bondholders are going to lose. But, bondholders are going to lose no matter what. There is no scenario where the bondholders aren't going to get clobbered. Either there's a restructuring, a default, or there's massive inflation to avoid that default. But either way, I think U.S. dollar-denominated bondholders are going to get clobbered.
Peter, it's a grim picture out there, but we really appreciate you telling it to us straight, actually. Thanks a lot, man. You're the best.
Yeah, thanks for calling. I was looking at a story from McDonald's, and even the CEO of McDonald's is saying that in order for our economy to grow, we need lower taxes because our taxes are much too high. But at the same time, he's saying that we cannot run up the deficit in order to cut taxes. I guess he understands the damage done to the economy by the government taking more money through the credit markets out of the private sector to finance deficits. So he is calling for spending cuts to kickstart an economic recovery. Big, deep spending cuts, which of course is what we need, but that is not what we are getting right now from the Obama administration. In fact, we're getting a lot of spending, even if Congress isn't authorizing it. Look, I've got some clips from the weekend from Vice President Biden just bragging about how the Obama administration is basically getting around Congress and just enacting stuff all on its own. Here he is talking about what he's done with the college, with the student loans and mortgages. Listen, it's cut number 4.
We can't wait for the Congress to start acting responsibly. And that's why the President has begun to use his executive power in making announcements like one that will put hundreds of thousands of people will be able to go and refinance their homes from the 6% interest they're paying to 4%, which is what the rate is now. That would save them $2,000 a year. That's why the President announced that beginning next year, no student will have to pay back more than 10% of their discretionary income toward their student debt. He also announced new regulations regarding prescription drugs to prevent price gouging. And there's more to come.
Well, first of all, he's not really using his presidential power. He is usurping presidential power. He is acting outside the Constitution to enact massive new spending programs without any congressional approval. I mean, think about this. He's allowing people to refinance their mortgages with government guarantees from 6% to 4%. He's talking about how the average family is going to save $2,000 a year. Where is the money coming from? If somebody is saving $2,000 a year, somebody else is losing that $2,000 a year. That is coming from the current mortgage market that is going to be coming right out of the U.S. taxpayers' money. Because remember, the loans that are still performing are helping to make up for all the losses. The U.S. government is guaranteeing, owns a significant percentage of these mortgages. If the mortgages refinance down from 6% to 4%, then there's going to be a lot less income on the performing mortgages to offset the losses on the non-performing ones. This is direct loss to the U.S. taxpayer. In addition, the plan to cap student loans, loan repayment as 10% of that discretionary income, which I think right now is they have to pay 10% on their income above maybe $20,000 a year. I'm not sure the exact amount, but it really amounts to, and I haven't actually done the math, but my guess would be that probably at least a third to half of the national debt was forgiven, of the student loan debt, was forgiven with that one act. And so that might anywhere from $300 billion to $500 billion, $500 billion added to the U.S. taxpayers' national debt at the stroke of a pen from President Obama without a single congressman voting yea or nay, a senator, nothing, with a stroke of the pen, a dramatic increase in the national debt. Probably, I don't know if there's been any other executive order that has put so much debt on the American public as what was just happened. And, of course, the moral hazard, meaning that, hey, nobody has to pay back these student loans, so just keep on borrowing because somebody else is going to get stuck with your bill. That worked out really well with health care, that third-party payer system, so it's a good thing we're adopting it now in college education, as if tuitions weren't rising fast enough. We had to make sure that we could send them into warp speed. But anyway, let me go back and take a few more calls. Oh, no, is Kevin still on the line? All right, we're moving on to Tim in Chicago. Tim, welcome to the Peter Schiff Show.
Hi, Peter. I just wanted to remind your audience what a great video Peter Schiff was right was and how much it changed my thinking, and it's getting real close to 2 million. That really is just a phenomenal video.
I know it's less than 5,000 views away from 2 million, but it is. But if you look at some of these other videos, that go, where all of a sudden, they get 3, 4, 5 million views. I mean, there's a lot of videos that have a lot more views than that one. But it took a long time too. The first million views happened pretty much in the first couple of weeks, so it's taken years for it to add the second million.
Right. And my other comment is, do you think Warren Buffett really should be blamed a little bit if these protests turn violent? I mean, he's just out and out lying with the way he's talking about how his secretary pays more taxes. I mean, he really should take some percentage of the blame if this gets nuts.
Yeah, I mean, I don't know what is going on with Warren Buffett, and I just think he's just really trying to help the liberal cause for whatever reason, and so he's given them this issue. But he is, the poster boy of why the rich are getting away with not paying their taxes. And I mentioned, I think, on the show before incorrectly that Warren Buffett takes no salary. Apparently, I think he does take a salary of $100,000 a year, but I mean that's peanuts. I mean, $100,000 a year. The income at Berkshire Hathaway is several $1 billion a year, and a third of that belongs to Warren Buffett. He owns 1/3 of that company. That's his money, and he is paying hundreds of millions of dollars a year in corporate income taxes on his money. And so to say that that's not his money, that he doesn't pay those taxes, is a lie. If, as I said, I could do the same thing. I could take my corporation, Euro Pacific Capital, which employs me, and I could pay myself no salary. And if I did that, or if I paid myself a tiny salary, and then I had some capital gains and interest income, my tax rate would go down from, on my federal income taxes, it's 35% plus the 2.9% for Medicare. So I'm paying, about 38%, and just federal, and of course I'm paying a state tax also. So if you throw my state tax in, I'm up in the 40s, and that doesn't count any of the other taxes or the sales taxes. But you just take that, I wouldn't be paying those taxes, but my corporation would be paying the taxes. But I could still say, hey, look at me, I'm paying less than my secretary, I'm only paying 15%, but it would be a lie. Because all my income would be in my corporation, and the corporation would have paid the taxes on my behalf. Anyway, I'm not sure if you have anything more to say on this. We've got a commercial coming up. We'll be back in a minute. Don't go away. You're listening to the Peter Schiff Show here on SchiffRadio.com. This is Peter Schiff here at SchiffRadio.com, and On the phone with us now was Tim from Chicago. Tim, I forget what you were. I know you were asking me about Warren Buffett. Is Tim there? Oh, Tim apparently hung up. All right, we'll move on. Tony from Chicago. Tony, welcome to the show.
Hi, Peter. Thank you for taking my call. Before I get to my question, I was wondering, are you going to have any video up on YouTube from your conference at New Orleans? I know you had a video on your Montreal conference. Are you going to have any videos for your New Orleans conference?
You know, the New Orleans conference recorded everything, so it depends if they make it available. I don't know if they're going to keep it just for the people who attended the conference, if they're going to put something up online. The reason that other presentation was there was because the organization put it up online in a way that we were able to copy it, and so that's what happened. But I don't really know. I don't know that the New Orleans makes any of that stuff public. I think if you want to see the presentations, you got to go down there and buy a ticket.
Oh, okay. I see. Okay. Here's my question. I know, Japan, last week, intervened, by printing out a lot of yen. Now, I just wanted to understand how it works. Is it because, the Japanese buy a lot of things with U.S.-based commodity, since U.S. is a reserve currency? Is that why they have to, if they don't print more money, they would have to spend a lot more yen to buy the same thing that they used to get before the U.S. dollar was expanded, right? Is that how that works?
It's actually the opposite. If they let the yen go up, all the products they buy from America or any place else become cheaper. And so that's a good thing. It's actually the opposite. What the Japanese are trying to do is make it so they can sell more stuff to Americans for less. They're trying to maintain the lower value of their currency so that exporters don't have to raise prices to Americans. And so ultimately the Japanese economy suffers because the government is undervaluing the Japanese yen. But the exporters have a lot of clout, these big Japanese companies that export. And when you're an exporter, by lowering your currency, it's basically like lowering the bar. It's easier to earn a lot of yen when the yen has less value. And so the cheaper the Japanese government makes the yen, the easier it is for Japanese currencies to earn those yen. But what really counts is not how many yen you earn, but the value of the yen that you earn. And if the Japanese companies earned less yen or fewer yen, but the yen actually had more purchasing power, the owners of those Japanese companies would actually be better off. But that, the politicians don't connect all those dots. They don't see beyond the immediate, and that's the problem. And you have these special interest groups that have the politicians' ears, and the politicians respond. But it is bad policy. But again, all these governments make bad policies. It's not just America. But a lot of the bad monetary policies of the rest of the world, America actually is the current beneficiary of those policies. The Japanese are shooting themselves, but they're helping America. But the word "helping" is in quotes because it only helps us in the short run. It hurts us in the long run. Just like if a drug pusher gives a drug addict some free drugs, the drug addict is helped by that process in the short run. But in the long run, the addiction is just being made worse, and ultimately he's going to be more beholden to the pusher because of the addiction that was cultivated. So, this is not the Chinese, the Japanese. They are not doing us any long-term favors by, getting us addicted to their monetary policy, to their currency interventions.
So what kind of effect does, let's say if I want to buy oil, they would have to first convert their current currency to the U.S. dollar, right? So if the U.S. is so much money and they're losing, if the U.S. dollar is losing so much money, wouldn't that be bad for them as well?
No, it's the opposite. It's the opposite. As the U.S. dollar loses value, they can buy more dollars with their yen. And so oil gets cheaper in terms of yen. The lower the dollar is, the fewer yen need to be used to buy those dollars, to buy the oil. And it's not just oil. I mean, all these commodities are priced in dollars, and so they all get cheaper for Japan every time the dollar goes down and the yen goes up. But by acting to prevent this from happening, the Japanese government is forcing Japanese citizens to pay more for these commodities, including oil, than they otherwise would have to pay. And you see, Japan has no oil. Japan is not like America. We have a lot of reserves. We're just not developing them as much as we could because of government. Japan has no reserves to develop. They have no choice. They've got to import all their oil. And the stronger the yen is, the cheaper it is to do that.
Okay. Okay, thanks, Peter. I had another question if you have time.
Yeah, you might as well. Go ahead.
I'm sorry? Okay.
Go ahead and ask it.
Okay. The other question was, like, if I wanted to convert my, U.S. dollar to another foreign currency, like let's just say Canada, do I just call up a bank in Canada and say, hey, I'm a U.S. citizen, I want to open up an account there, or let's say Swiss franc or Australian? Is that simple like that, or what kind of?
Well, as an American citizen, you're going to have a tough time opening up a foreign bank account now, thanks to all the U.S. government laws that have been imposed. But you don't need to do that to buy Canadian dollars. I mean, you can buy Canadian dollars through a U.S. bank, and you can certainly buy it. I mean, we do it for our clients at Euro Pacific Capital all the time. We are buying foreign currencies for the purpose of buying foreign bonds, for the purpose of buying foreign stocks. So if you're interested in getting into the Canadian dollar or other currencies and getting into stocks and bonds outside the United States, just call up my brokerage firm, Euro Pacific Capital. Go to europac.net, pick up the phone number, call maybe one of the offices if there's one near you. There's 6 we have in the country. We are going to be opening up a Chicago office. We don't have one yet, but our plan is sometime in 2012 to open up an office in Chicago. We are, we now have the ability to open more offices, so we are planning on doing that.
I see. Also, I can just go to any local, let's just say Chase, and say, yeah, I want to buy some Canadian currency, and I can do that. I can keep it in the bank as a current. I
don't know. You got to check with the bank, and I don't know what kind of requirements they might have, what kind of restrictions they might have. But yes, I mean, and what you don't want to do though is you don't want to go in there like you're exchanging money, because you go to a bank and you try to exchange a few $100s or a few $1,000s, they really stick it to you in the exchange rate. So you got to make sure that you're not getting gouged like you're a tourist just trying to convert a little bit of money. You got to get a real institutional interbank rate. Anyway, hey, thanks for the call. Our guest is coming up when we get back. Her name is Gretchen Hamill. She's the executive director of Public Notice. She will be back when the Peter Schiff Show resumes. So stick around. You're listening to Peter Schiff on SchiffRadio.com, the gold standard in talk radio. This is Peter Schiff here at SchiffRadio.com. Hour 2 is underway. Joining the program now is Gretchen Hamill, who is the executive director of Public Notice. And Gretchen leads a team of communications and policy experts in their effort to explain complex economic, regulatory, and budget issues to Americans. They definitely need to have a lot of these things explained, although they're not really as complex as a lot of people think. I think the issues are actually quite simple. The problem is nobody is putting the issues in simple terms. Anyway, Gretchen, welcome to the show.
Hi, thank you so much for having us.
So thank you. So I'm on your public policy website right now at thepublicnotice.org. Tell me a little bit about this organization, how long you've been in business, and what your primary goals are here.
Public Notice is an organization that strives to explain economic policy to the American people in simple and understandable terms that they can understand, and we do that through, our different educational campaigns. The first one is Bankrupting America. So you can find the best product at bankruptingamerica.org, where we put out fact sheets about what's currently going on. We put out videos and fun infographics that explain really what's at stake here in the U.S. and how our leaders can be fixing the problems.
Yeah, well, I would argue that we already are bankrupt. It's just a question of acknowledging the fact that we're bankrupt and figuring out a plan to work it out. But what is in your view of bankrupting America? Where do you think we stand as far as solvency? And if you think we're still solvent, what is it that's driving us to bankruptcy? And how much longer do we have before you would have to conclude that we are bankrupt?
Well, there are a number of economists who say we are just a few years off from being in as bad a situation as Greece is right now, and you have to look no further than the headlines on any TV or newspapers to know that's a pretty bad situation to be in. But we're nearing $15 trillion in debt, and we're just a few months away for our debt being the entire size of our economy, and that is something frightening. That's something that the American public has never faced before, and it will be the first time in U.S. history, basically, that we've arrived at this deep in debt. And it's really just because of the mentality here in Washington that every problem deserves to be fixed by just throwing money at it instead of actually taking on the problems and fixing the problems one by one.
You could, I would argue that too, that the debt is a lot higher than the $15 trillion right now. I would say that President Obama, just with the stroke of a pen on his executive orders on student loans and housing, probably added at least another $1 trillion to the national debt right off the bat. And then, of course, you've got trillions and trillions that exist right now as current obligations of Freddie and Fannie. So I would say that on paper we might already be as bad as Greece. But, you know, Greece was bankrupt a couple of years ago. They were still bankrupt even though they were able to borrow. So just because we can keep borrowing today doesn't mean we're not already bankrupt. Because if you took short-term interest rates up in the United States from the low levels they are right now, let's say our interest rates moved up to 5 or 6%, we would have our Greek moment right now.
Yeah, of course we'll have our Greek moment right now. I mean, we have overpromised and underdelivered to the American people, and if we don't do something to put in some reforms, some spending reforms that actually cut back on the amount that we are spending, we will be in a severe situation.
Yeah, I know. I'm looking at your website right now. You've got a budget briefing booklet on this super committee. What's going on there? Are you following that closely? Has there been any real solutions brought about yet by this so-called super committee, or is it just more politics?
We are following it very closely, and unfortunately it doesn't seem like there's being much movement at all when it comes to finding some solutions and trying to find between 1.2 and 1.5 trillion dollars to cut, and which is very unfortunate when you are facing and you are looking at our steep debt and how are we going to curb that. It's very unfortunate that these leaders can't even join together to find just a little over $1 trillion to cut.
Is public notice, do you have any specifics where you've outlined ways that you think spending could be cut in a productive way?
You know, we have not, and we've, taken a kind of a more pure stance from the respect that it just needs to be cut across the board. I mean, every organization within government should feel the pain of the budget crunch, and every organization will be more efficient and effective and will operate smarter if they are forced to do that.
Does that include things like entitlements? Would you say that people who are currently getting Social Security checks should get smaller checks?
I think that Social Security reform should be on the table. I mean, if I'm to receive it, and I would like to receive something from the program that I've been paying into, then some reforms have to be made. I mean, I think that all options should be on the table.
Right, but what about the people who are currently receiving benefits? Do you think that some people who are receiving benefits should receive no benefits or maybe smaller benefits than the ones they're currently receiving?
I think that decision is to be made by those leaders in Washington. But obviously, you don't think that Donald Trump deserves his Social Security check. But at the same time, when you ask the American public about this, they believe it's a fairness issue that Donald Trump, paid into the system, so therefore he should receive something.
Yeah, well, I would much rather see Warren Buffett talking about the need to get rid of Social Security for people like him than to raise income taxes. I mean, that would be a much more honest thing for Warren Buffett to talk about. Yes, why does Warren Buffett need a Social Security check? And, of course, there are a lot of people who are not as wealthy as Warren Buffett, but who are still quite a bit wealthier than the average American who is paying the Social Security taxes. They don't need their checks either. So if we're going to do something about the rich, removing subsidies would be better than increasing taxes.
Correct.
So what are the other issues that you guys are talking about? I notice also up on there that about the national debt. Were you pretty active in the most recent negotiations over raising the debt ceiling, and what position did your organization take on raising the debt ceiling?
We took a position that Congress must cut spending, and we didn't take a position on whether they should raise it or not. We, of course, don't want the country to put itself in a situation where it could harm the economy. But at the end of the day, they just needed to do one thing, and that is cut spending and get our spending under control.
Well, but no spending is being cut. I mean, don't you think that probably the best way to have accomplished that would have been not raising the debt ceiling? I think that, unless politicians are forced to cut spending, I don't know why they would do it.
Well, we didn't want to we don't think that our nation should have been put in a harmful economic situation, a situation that had never been put in before. And at the end of the day, the administration had a say on whether we would default on our loans or not. And we did not think that it would be, good politics to allow, or not, I shouldn't say good politics, but also, good for the economy to be put in that position. So,
but wouldn't you take the position, though, that running up big deficits is also putting the economy in harm's way and is harmful to the economy?
But at the same time, I don't think should be putting our economy in this nation in a position to where the administration makes a call on whether we default on our loans and our veterans and those in the military don't get paid.
But you see, you bought into the president propaganda now because we didn't have to do that. We could have made other cuts. But the very point is, if you see that the debt is a problem and the deficit spending, it's never going to stop. As long as we raise the debt ceiling, they will never stop spending. The only way they're going to stop spending is either we don't raise the debt ceiling or we have a crisis, which is where our foreigners stick us with a lending ceiling. We'll talk about this when we get back. We got a commercial break. Stick around. You're listening to the Peter Schiff Show on SchiffRadio.com. Welcome back. This is Peter Schiff talking with Gretchen Hamill of Public Notice. And we're talking about the debt ceiling and spending. And Gretchen, I just wanted to ask you a question because it seems that it's a bit inconsistent. That if you acknowledge that the spending and the deficits are a threat to our economy, and we had an opportunity to put an end to the spending and the deficits by not raising the debt ceiling, why then would you be in favor of raising the debt ceiling if it would have put a stop to something that you acknowledge is harming the economy and putting it in danger?
I never said that we would be for raising the debt ceiling. I never said that. At the end of the day, I said I did not want to put this nation in an uncharted territory where it could have ramifications to an already struggling economy. And you claim that I was buying into the president's propaganda, but I claim you are playing into the president's hands and putting this nation and this country in harm by letting it continue.
Well, now... But so then, now I'm confused. So you were opposed to raising the debt ceiling, then? You did not support the...
I just said we neither opposed or supported raising the debt ceiling. At the end of the day, what needed to happen was for them to cut spending, period.
Right. Well, but my point is they weren't going to do that if the debt ceiling was raised. So I think it would have been an issue that maybe you guys could have taken a position on by saying do not raise the debt ceiling. And if we hadn't raised it,
we would become political if we did that. We try to keep away from that. We try to inform people on what is happening here in the economy, and we feel like it is a greater service for us to do that by educating Americans and let the Americans putting pressure on their congressmen than for us to be taking a position.
All right. I definitely appreciate what you're trying to do. Maybe I just don't see the distinction. The whole thing is political. If you're saying we think you should cut spending, well, that's political. So if you can be in favor of cutting spending, you could also be in favor of not increasing the debt ceiling. I don't see how the one is more political than the other.
Well, there is a very big difference, and the ramifications of that would be very different as well, and also the political ramifications and the talking point the president would have had going into the presidential cycle. So, we didn't want the president and we didn't want congressmen and women to have to make this a political game when at the end of the day, and it's not about political talking points, it's about putting our economy first and doing what's best for our economy first and foremost and not playing the political games that they were playing.
Well, I'm not talking about playing games. I'm thinking that, what would be best for our economy would be to stop the deficit spending. And if we had a limit on that.
So we're just arguing in circles. Yeah. Can we move on?
Do you take a position on other ways to limit government spending, on the constitutional amendment for a balanced budget or any of that, or is that too much politics?
We don't get into that either.
So what do you see then as the main issue that is driving the bankruptcy? Is there any particular spending then that you want to target? Or is it just saying across the board? Do you look at
across the board? It's saying that everything needs to be on the table, everything needs to be looked at, and it really just comes down to a mentality change in Washington. That 60% of spending increase under President Bush. That this is not a Republican problem, and this is not a Democratic problem. This is a problem that everybody has in Washington, and they need a change.
Yeah, what I think would be helpful though for your organization, because a lot of politicians like to talk about, yes, everything has to be cut, but then they don't actually want to lay out what needs to be cut and by how much, because I think that's where the politics comes in, where the political elected officials are afraid to say something, but maybe Public Notice, which is not a political entity, can actually say specifically, here is what we can cut and by how much, and obviously there's going to be some things that can be completely eliminated. So it doesn't have to be everything gets cut by 10%. Some things could be cut by 100%. and then maybe some things don't have to be cut as much if we can eliminate a lot of the things that government shouldn't even do. Do you take positions on things that the government shouldn't even be involved in, that they're involved in right now, that could be eliminated completely?
We leave that to the think tanks of the world. Our primary objective is to educate Americans on what we're actually spending our money on, and how that can change, and where the waste and where the money is going, and what the trajectory of this nation is going to be. We leave it to the think tanks out there, and there's enough people pontificating about what should be done here. We just want to arm the Americans with the facts.
And so, what's your funding source? How does your organization get the funds to pursue this mission?
We are funded by concerned Americans that are concerned about where this nation is heading, its economy, and think that more Americans should be educated on this. We're from east to west coast. We have donors of $5 and up, and we appreciate their concern for this nation and for the American public being educated on the issues.
All right, so it's just individuals. There's no organization or groups. You're just basically private donations from just average Americans who are attracted to your cause?
That's correct.
All right, and so if people want to donate, is it they just go over? I'm on your website right now. It looks like there's a donation button right in the upper right-hand corner.
America.org, or go to thepublicnotice.org.
Yeah. How large an organization are you? How many people are there?
We have right around a dozen.
Mm-hmm. And how seriously? Do you see a lot of your work out there? Are any other these think tanks or any politicians? Are they pointing to some of the work that Public Notice is doing? Are you see any real progress being made?
Oh, yeah, we are seeing a lot of progress being made. We've had people that have been in our small business videos have actually testified before Congress because congressmen and women saw them in our videos. We have our products and fact sheets being used on the Hill every day. And also just around the nation. We have over 60,000 people who belong to our Facebook membership, and they are an active group that are participating in a debate about today's spending issues across the board, from the state and local level on up.
Do you take a position on taxes as well, or is it just spending?
When it comes to taxes, we believe that everything should be on the table, and there are probably some reforms that need to be made, but until Washington can show us they can use $1 effectively and efficiently, why give them another dollar?
Okay, so you're opposed to any tax increases, which I guess would include
I didn't say that. I just said until we have this conversation, until Congress and Washington can get its spending under control, we shouldn't even be talking about taxes, but tax reform is needed.
Well, tax reform and tax increases are kind of a different thing, although I'd say tax reform would involve increases on some people and decreases on other people. But what you're getting, let's say, out of the Obama administration is just we need higher taxes.
Mm-hmm.
So, but you're not. So, do you have an opinion yet as to? Are you saying no, we shouldn't have higher taxes until we tackle the spending?
I'm saying that we shouldn't even be talking about raising taxes until Washington can show us that it can utilize $1 effectively and efficiently.
Well, they're never going to be able to utilize money efficiently. That is the nature of government.
That's a very sad thing for the American public.
Well, that's the nature of government. Governments can't be efficient, so that's why you want to keep government as small as possible. Whatever money they spend, they're going to spend inefficiently. We have to acknowledge that. That's why the key is to give them as little money as possible to spend, and we can leave that wealth in the private sector, because the private sector will be efficient because their people spend their own money. And you're never efficient when you're spending somebody else's money. You're only efficient when you're spending your own money. When you're in a hotel, very few people bother to turn out the lights when they leave the room because they're not paying the bill. Or when you have a rent-a-car, you don't treat the rental car anywhere near the way you treat your own car because you're in it for a day or two. So you're not going to get efficiency out of government. That's just the nature of the beast.
Well, that's unfortunate. I would like to believe that we could. Maybe I'm just a little green and a little, Pollyannish, a girl that came from Oklahoma expecting to make a difference. But
well, you might be, and we can certainly make the government less inefficient. I'm not saying that that's not an admirable goal. You're never going to get private sector efficiency, but you can certainly get rid of some of the waste, some of the fraud and abuse. But I think most of what we have to do is get rid of the real spending, the meat. But anyway, hey, good luck. I appreciate you coming on the show. I wish you all the best with Public Notice, and hopefully you can continue educating the public about the dangers of government spending and deficit spending, because it is a very treacherous road that we are heading down, and I don't like where it goes. Anyway, we'll be back. Everybody else, we got another full half hour coming here at SchiffRadio.com. Don't go away. This is Peter Schiff, our Well, no, it's not more than just hour two. We've only got 1/2 hour left here of the Peter Schiff Show. Hey, anyway, before I go back to your phones, and first of all, if you're watching the show, or if you're used to watching the show via video, you are not seeing any video today. Again, that is because I am doing the show remotely from Southern California. I will be doing the show from this location all week, so there will be no video, just sound. And as I said earlier at the show, on Thursday, Tom Woods will be taking the mic as guest host. Just a little bit too much on my plate on Thursday to do the show, but I am able to do the show every morning. I guess that the change in the daylight saving time helped me out. So instead of a 3-hour time difference, I now just have 2 hours. Anyway, let me go to the phones real quick. First caller is Mike calling from Hackensack. Oh, next is Brian calling from Washington State. Brian, you're on.
Hey, Peter. I have two questions, and the first is about mining stocks. I was looking at the financial reports for the big mining companies, and I noticed that Goldcorp has a much higher PE than Newmont, Barrick, or Kinross, despite having less earnings and a much smaller dividend, and I was wondering why that is.
Well, I really can't talk about individual stocks in the way that might be conceived as recommending one over the other. That is a problem because of security regulations. But, obviously, in general, when you have PE ratios, I don't know what you're looking at. I'm looking at the Goldcorp PE that I'm seeing is 23, 24 times, whereas stocks like Barrick Gold are at 10.5 times, and, Newmont's showing that on my screen at 15 times earnings, so it's a little bit higher. But Kinross is showing at 17 times earnings. I mean, companies are going to have different earnings estimates based on what the growth rate is. Because if two companies have the same amount of earnings, but the market is anticipating a higher growth rate with respect to one company than the other, the company where earnings are expected to grow faster is generally going to trade at a higher PE. Because not only are you paying for current earnings, but you're paying for the growth in those earning streams. So all stocks are not going to trade at the same multiple because all stocks are not going to have the same growth rate assigned to their current earnings. And then, of course, there are other factors. Some gold companies may have their mines located in regions that maybe are more politically uncertain than others, and so some companies simply might have a higher valuation placed on those earning streams because the earnings are conceived to be more reliable. Now, I'm not making any particular statements with respect to the stocks that we're discussing. That's just in general why you're going to see that discrepancy in PEs.
Okay, understood. And my second question is about oil. And I'm wondering, do you believe that it's possible for America ever to have inexpensive oil again based on increased domestic production, or would you take the Jim Rogers line? I don't know if this is his line, but reading his stuff, it sounds like he thinks that the supply and demand imbalances with respect to oil are so bad that it's never going to get better.
Well, I don't think the U.S. is going to see cheap oil again. I think we can produce a lot more oil, and I hope that we will, but I think a lot of that oil is going to end up being exported. That's going to be the problem because the world is going to certainly outgrow us, certainly based on our current monetary and fiscal policy. So I do think that to the extent that we are able to produce a lot more oil in this country, and we certainly could do it, I think a lot of it is going to end up filling the gas tanks for the Chinese and not necessarily here in America. So I think we are looking at higher oil prices in real terms and in nominal terms for Americans for years and years, maybe decades to come. And that is one of the reasons that I am so heavily invested in that segment of the market personally, and why we in any of the products that we're involved in, we have overweighting in the oil and gas sectors.
Okay, well, that's all I got today. Thank you, Peter.
Hey, thank you for the call. On a political note, Ron Paul won a straw poll over the weekend in Illinois, but you wouldn't know it from the media coverage. In fact, you wouldn't even know that Illinois had a straw poll. In Illinois, that's a big state. I mean, it's a battleground state. It includes Chicago, one of the largest cities in the United States. You would think that an Illinois straw poll would carry some weight. I think the only reason that nobody was talking about the straw poll is because Ron Paul won it. Had it been won by any other candidate, it would have been big news. But because it was run by Ron Paul, it was, nothing that was worth covering. In fact, there was an article in New York Times Magazine over the weekend, it was last week, and it was a big spread, and it was basically showing how the candidates would do in a head-to-head matchup with President Obama. And it obviously showed how Herman Cain would do, and it showed how Mitt Romney would do, and then it showed how Rick Perry would do. It even showed how Michelle Bachmann and John Huntsman would do. And, of course, Michelle Bachmann and John Huntsman barely register anymore in the polls, yet the New York Times decided to focus on how two candidates that have a very, very slim shot of actually getting the nomination would do against President Obama. Yet for some reason, this piece completely omitted an analysis of how Ron Paul would do. Even though Ron Paul, in most polls, is coming in third, and I think some polls, maybe Gingrich might now be third, but how could you exclude Ron Paul, yet include people like Michelle Bachmann, who really have an even slimmer chance than Ron Paul? And in fact, the irony of the whole situation is, if you look at the national polls that show the candidates in a head-to-head match with Obama, Romney is in the best shape against Obama. But coming in second best of all the Republican candidates, the candidate who fares best against President Obama is Ron Paul. So if you're going to do a story about how the various candidates are going to compare to Ron Paul, to the President Obama, how can you leave out Ron Paul? Especially since Ron Paul is clearly the most conservative of all the candidates. If you look at his record, even though he is also a libertarian, if you look at Ron Paul's voting record, he is the most conservative voting record on conservative issues as anybody, more conservative than anybody else in this field. Yet the New York Times is not even polling how the most conservative candidate would do against President Obama, despite the fact that national polls have him well ahead of the other candidates who they did decide to feature, even though those candidates, by current polls, have an even more remote chance of actually being the Republican nominee than President Obama. Again, it is just continued media bias, which should be obvious by now, against candidates that believe in liberty and actually shrinking government, like Ron Paul. And even to a greater extent, of course, like Gary Johnson, who doesn't even get included in the debates, let alone the media coverage. But anyway, let me go back to the phones. On hold is Keith calling from Maine. Keith, welcome to the show.
Hey, Peter, thanks for taking me on the show today. I appreciate it. Obviously, been on the line for so long, I've got so many questions now from listening to the show. But getting to Ron Paul, like you were just talking about, I think it's very obvious that he's being, pushed away from mainstream media. But it is amazing that when Warren Buffett talks, everybody listens. When are people going to realize that he's part of the game?
I don't know. I guess the media loves to feature Warren Buffett because he's saying what the media wants to hear. He is repeating that refrain that the rich are getting away with murder, that the rich are not paying their fair share, and that the problems in this country all flow from the rich not paying enough taxes. And if we just tax the rich, we can solve our problems. Because taxing the rich is a way that the public likes to solve these problems, because it means that they don't have to give anything up. Right? If you could just tax somebody that's a lot richer than you and solve all of our problems, that's something that the average voter, can really run with. That they like that. They like to think that if we just make Warren Buffett pay more in taxes, that we're going to create jobs, we're going to grow the middle class, that we're going to have a great economy, and all that stands between us and this economic miracle is a bunch of greedy rich people who don't want to pay any taxes.
Yeah, it's like the lady that you were just talking to earlier about the debt ceiling and stuff. And it's very clear to me that she understands that there's a problem, but she doesn't understand the problem. That's why she never really wanted to talk about taxes and stuff. And I'm glad you brought that up because it was driving me crazy that you guys weren't talking about taxes. Because obviously if you raise the debt ceiling, guess what? You better raise taxes. And that's just the way it goes.
Yeah. I didn't really understand her idea that she said that she didn't want to be political. I mean, she didn't want to be political the very idea of controlling spending is political, because it's politics that makes the decision on how much to spend, and if we're going to spend, we have to cut things. So I think that she's trying not to offend anybody. I think that's the problem. I think the organization is trying not to be associated with one political party, either Democrat or Republican, so they're not taking sides. But I don't know that. I think they would be a lot more successful if they actually did take sides, especially if they saw one side that actually favored their agenda, because I don't see how you can keep politics out of an organization that's trying to cut government spending.
That's correct. Absolutely. Absolutely. Well, Peter, I just want to let you know that you are waking people up, and keep fighting a good fight, son. And
all right.
Remember one thing. I believe that we all have differences, and we don't all have beliefs, but the one thing we all believe in is freedom. And that's the way that you can connect with people, and I think that's how you've connected with me, is to realize that we have to fight for freedom, because if we don't, what's the future for our kids and our grandkids and our grandkids' kids, and what happens when all the resources are gone in this world? You know, nobody thinks about that, because they think about today, and they'll be like, well, I'm gone by then. So if the resources are gone, I don't have to deal with it.
Yeah, and we have to remember, too, that when we're talking about freedom, we're talking about freedom from government. We don't get more freedom with more government. Right? Every time we expand the role of government, every time government passes a new law, a new rule or regulation, it's diminishing our collective freedom. Anyway, we'll be back. We've got one more segment coming up here on the Peter Schiff Show at SchiffRadio.com, so don't go away. We are back. This is Peter Schiff here at SchiffRadio.com. Hey, speaking about hypocrisy, I got a little sound from labor leader Jimmy Hoffa, who was railing against the rich at a rally in Ohio, where he is speaking against any efforts to rein in the runaway compensation of public sector unions. And, of course, to pretend you're for the public when you're for preserving the bloated pay of public sector workers, what you want to do is diminish the pay of private sector workers, because the only way that the public sector workers can be paid is by taking it out of the wages of the private sector workers. So what he's really in favor of is pay cuts for everybody who doesn't work for the government, so that we can have pay raises for everybody who does. But, of course, he was also railing against the rich and the 1%. Jimmy Hoffa makes $300,000 a year. Now, that doesn't quite qualify him as a member of the 1%, because I think the cutoff is around $320,000 or $330,000. But he's right on the cusp of being in the 1%. Anyway, here is a reporter pointing out the hypocrisy. You'll see Hoffa's reaction. This is cut number 7.
You made $300,000 last year, and they're wondering why the wealth can't be spread around back to the due payers.
Well, I think that the answer is what we've got to do is have more taxes on people,
right.
And I think we're going to raise the taxes on the rich people in this country, and I think everybody should do that, and I think we should have more taxes, and let's make sure that everybody has equality of sacrifice, and we should be paying more taxes, just like Warren Buffett.
Well, what about union leaders?
Yeah, so he has no answer. He wants to tax the rich. It doesn't realize that he is a member of the rich, yet he only wants to raise taxes on people like Warren Buffett. Again, this Warren Buffett has done such a disservice to his country by creating this false idea that he is not paying any taxes and that other wealthy people aren't. I like this reporter, though. He's continuing to bring up some of the hypocrisy. He's at a rally. Here's some sound from the same reporter at Occupy Columbus, where he points out to a protester the amount of money being made by these labor union bosses. Here he is, cut number 8.
So how does issue 2 relate to Occupy Wall Street?
To me, Occupy Wall Street is based on the fact that we've created an economic system of injustice.
So how do you feel about Larry Wicks, the executive director of the OEA, making a salary of $210,000 directly from the dues of the union members? How do you feel about that?
I'm sorry that he's chosen to accept that much money.
She's sorry. How about being outraged? How about, maybe we can have at these big Occupy Wall Street protests, how about if we protest the labor union bosses and how much money they're earning, how much money is being extracted from the rank and file without any say. A lot of these people are forced to be a part of these unions. The dues are being extracted from their pay against their will and being used to enrich the union bosses. Anyway, let's see if we can squeeze in a few more calls. We don't have a lot of time left. Chip from New York, you're on.
Peter, can you hear me?
Yes.
I just want to say I'm a big fan. I discovered you when you ran for the Senate, and I've read all your book, and I'm learning all about the Austrian school. But I'm a college student, and we recently had this project, what's your ideal system of education? And I got up in front of the class and said, abolish all student loans. And it was well received. I got more applause than anybody else. But my professor was saying, well, that will create a problem because it will take years for colleges to cut down on tuition. If that happens, what's your response?
No, it would happen right away, but I can understand why your college professor would be against it, because it would mean that his pay would have to be cut. So the students are for it because it would mean tuitions would come down. But in bringing down tuitions, they would have to bring down the pay of a lot of the university professors. And in fact, they might actually have to do some work, because they might have to fire a lot of their teaching aides and associates and assistants. So a lot of these professors might actually have to spend more time in the classroom and less time, vacationing or on the golf course or whatever it is they do when they're not teaching. But it's interesting you got the applause. Hey, thanks for the call, Chip. I want to see if I can move on. Phil, calling from Miami, Florida. What's up?
Hey, Peter, what's up? I had a question I have two questions. One about your take on the situation in China, because I saw that they're having the manufacturing index drop, and they're having some inflation issue. And
I'm very bullish.
If you happen to catch the Saturday Night Live take on Greece, the situation in Greece that they made fun.
Yeah, I didn't watch Saturday Night Live this week. I'll try to check it out on the internet. I'll make a point of doing that because it's usually pretty funny. I'm very bullish on China, on their industrial production. They have inflation. The inflation results from their monetary policy of propping up the dollar. Eventually, this will come to an end. Real quick, I've got one last caller from England. Luke, welcome to the Peter Schiff Show.
Hello, Peter.
Hey, you got to make it quick. What's on your mind?
Okay, yes. Okay, quickly. I read an article, and they explained that gold miners were lagging the price of gold because they keep issuing new shares, almost like printing money. What's your opinion on that?
Well, that's not the case. I mean, you're not getting a lot of new stock being offered by the major companies. Certainly, some of the exploration companies are constantly selling shares because they need money, because they don't have any production. They don't have any earnings. But the major gold companies, they're actually raising their dividends now because they have all this extra cash flow. So they're not issuing new stock. Some of them might even be buying back stock. I mean, I think that the underperformance of the mining sector is attributable to the skepticism with which the investment community views the gold market. I think more people think gold is a bubble than an opportunity. And I think that's why these prices are so cheap. And I don't think they're going to stay cheap for long. That's why I'm a big buyer of the sector myself. That's why I've encouraged people to buy. Now, of course, I could be wrong. The people who think it's a bubble could be right. Maybe these gold stocks are not going up because they're about to crash. I don't happen to believe that, but, that's always a possibility. So, if you're going to buy the stocks, make sure you understand what the downside risk is because it's not all upside reward. It's always a trade-off.
Okay, then. Thanks very much, Peter. Great fan of yours. Wonderful job.
Hey, thanks for calling. And as we come to a close, the stock market is now selling off a bit. We had a rally earlier in the morning. The Dow is now down about 60 points. The NASDAQ has accelerated its decline to down 25. But gold and silver stay strong. Gold is now near the high of the day on the GLD, up about the equivalent of $26 an ounce. The dollar is still relatively flat. It looks like it's actually turned around against the euro. The euro was up this morning. It's not down. We're just below 137 on dollar-euro, but it's not any kind of a big rally that we're seeing in the dollar. Let me see if I can get a quick check of the crude oil market. Still strong. Crude oil still north of $95 a barrel. This is one of the more powerful trends out there that the Fed seems to be ignoring at the peril of every American. Anyway, that's it for today's show. We'll be back again tomorrow from Southern California for another 2 hours of the Peter Schiff Show here at